Channel 1. Another story that we are following up on is the EAC trade fair that has been ongoing in Juba, South Sudan, with over 500 SMEs from Kenya participating. Of course, our very own Brian Kimani has been following up on the proceedings at that exhibition and will be joining us within this particular program to give us the latest on what SMEs are doing to ensure they take advantage of the market in the region. The third story we are following up on is the engineers summit that is ongoing in Mombasa. That is the Institution of Engineers of Kenya. They are calling for engagement of local engineers to spur infrastructural development in the country. Regina Manyara is on that bit. She shall be joining us as well during this program to give us the latest of today's proceedings. Now we get back in studio where we want to talk about matters investments. And to have this conversation is Victor Marangu, who is the head of distribution at Standard Investment Bank. Thank you very much for speaking with us.
Thank you.
Karibu sana. Maybe you just give us an overview into what financial wellness is. Let's start there.
Thank you, Betty. Financial wellness is basically the ability to be able to meet your lifestyle needs, of course, which are monetary in nature. You're able to pay your bills, you're able to take your kids to school, you're able to, if you're retired, you're able to fund your lifestyle during retirement, you're able to pay for your medical bills. As people go to as far as being philanthropic and funding charitable organizations and such. So financial wellness is basically being able to live within your means and also being able to sustain your lifestyle. Yeah.
And how does someone achieve that, especially when you're looking at the older people, senior people? How do you make sure that by the time you're reaching maybe retirement age, you're financially stable? So
okay, great. That's a good question. This requires a lot of discipline. Sadly, these are not things that we are taught in school. When we're in school, we are taught various topics like biology, for example, which is good because that's why we get our medical doctors and other practitioners in that line. But when you look at it critically, even when you become a doctor, you still need to understand matters, financial planning and wealth management. So for you to be able to live a comfortable retirement, you ought to start early. And starting early is relative. If you're 40 and you want to retire at 65, you still have those 25 years to be able to generate enough savings and invest. So the principles that apply here is about being able to budget, monitor your inflows, and track your spending. That is very important. And there are various theories that are being brought forward to assist people in managing, because people are dynamic in nature. The way people view money is totally different. But there are certain key guidelines that are normally given. Like, for example, there is the 4 magic numbers that are advanced by a guy called Ramit Sethi. It says about 50 to 60% you can put it on your costs, on your fixed costs. Then 5 to 10% you put into investments, 5 to 10% you put it into savings, and then 20 to 35% is what he calls guilty-free spending. So you realize that there is some residue unspent revenue every month, and this cumulatively, even if you look at a typical return of 12 to 16%, you can actually double your initial capital in a period of 4 to 5 years. And that is very, very critical. So it is very important for you to track your spending. Most of the people, when they get money, they behave differently. You read from the same script, I'm going to be very wise in spending my money, but at the end of the day, what happens is that people receive the money and they just jump onto any shiny object that is being flashed across the screens and everything else, but at the end of the day, you realize that you did not meet your particular objective. So it requires a lot of discipline to be able to make sure whatever comes your way as a form of a paycheck, part of it is annexed for future use. And that one requires a lot of discipline and also understanding that the way we are wired as humans, you're supposed to take care of yourself. And now the funny bit is that your future self is actually like sort of a stranger to you. That is why you don't feel like taking care of that stranger. You want to take care of yourself right now. So if you understand that, then you know that your future self actually will be totally dependent on you. So you take up that responsibility and know there's someone in future who awaits to be taken care of you, who is yourself. And that way now someone can develop a sense of, if I get my 100,000 and then I'll put 20,000 and then plan for these other 80,000 to do other things. That way you can be able to achieve financial freedom into the future years.
According to the KDIC, the people who have 100,000 shillings or more in their bank account is less than 1% of our population. When you get to 500,000, it's even less. It's at 0 point something. So how do you balance between the needs, the current needs? You know, you have responsibilities. When you look at your paycheck, you probably have more responsibility than your paycheck can handle. So how do you balance the spend for now and later?
Just going back to the same numbers I've actually told you about the allocation. We talked about percentages. We did not even speak about absolute amounts. You talk about a percentage. If your income is 20,000, you just know I need to put 20% aside. Okay? 5 to 10% in savings, 5 to 10% in investments. And there are so many products out there with as little as 100 Kenyan shillings you can be able to invest. So people have this notion of, when I get money, I'm going to invest. You see, investments is a function of your savings. So first of all, you save money. When you save, it means you have a surplus. So you get your paycheck. You pay all your bills. If you pay all your bills and you remain with nothing, then it means you are living beyond your means. So you're supposed to cut out on expenditure and make sure that you live within that particular paycheck and then set aside that a particular amount. When you set it aside, it can accumulate to a certain level. Maybe it can be a minimum requirement for an investment. Then you select the right investment vehicle you want to, in terms of, for example, you can put it in a money market fund. If your investable becomes like 250,000, you can put in a fund like Mansa X offered by Standard Investment Bank. And that is how you start building wealth. Wealth is not something you find somewhere kept and then boom, you become rich. It is painstakingly built over time, sacrifices. You don't want to go out for that particular weekend because if you know you go out, you're going to spend 30K or 50K or you make mistakes. There is this joke that goes on, as you receive a message, uko wapi? It is a mistake that you make. You end up making very bad decisions, such as being asked, uko wapi? So you can avoid such peer influence and be able to say that I have to make a sacrifice to generate real wealth. And that's how, there is no shortcut to wealth. People will say, oh, that one was born in wealth. How many people have we seen who are born in wealth who ended up being poor? Because in their mindset, they did not have that blueprint for making money and protecting wealth and being able just to multiply and make more. That is, you utilize the opportunities that are available with your 100 shillings, with your 500, and that's how we're going to get to the top 1%. Not all of us, of course, because the income levels are different, but that does not mean happiness and living, being financially free means you have to have billions stashed somewhere and all that kind of. There are people who are living modest lives and they are very happy.
Right.
Okay.
Right.
Yeah.
Let's talk about financial wellness for the young people. A lot of young people, they see things on social media and want to live, the lavish lifestyle, show that they're living large without considering what will happen in the future. What would you advise young people as they even start their savings journey?
Young people, I can say, just by being young, you're so lucky because you have one very critical resource called time. Time is one of the key assets that young people can utilize. For example, you can start early because if someone is, for example, at 50 years and a young person is at, for example, 20 years or 25, maybe started earning something at 25, and then this person invests all the way for 30 years, for example. They are saving something for 30 years. And this other person at 50, retiring at maybe 60, they only have a time frame of maybe 10 years. But this other person can afford to put even something very little, but because of the time factor, the compounding effect over the years, you can actually end up making a lot of money. But the problem is, you want to see someone who is older than you, the kind of lifestyle they are living, and then you see Instagram, especially the way they take nice photos on Instagram, then you're like, this is the life. People get into debt. There are so many mobile money applications that people can borrow, and at a very exorbitant rates, rate as high as 15, 20, 30% per month, which is unsustainable. I want to remind young people that the biggest toolkit you have is a factor called time. And then you need to develop the discipline to understand that when you look at your age, how old you are, what skill sets you have, and what is available to you at the moment, and develop the discipline to say, I will live within my means. And then by doing that, I will go heavy on investments, because everything in life is about sacrifice. If you want to achieve something, you have to get rid of something. And that includes not being excited easily with shows and events and showing up for parties and everything else. Don't try to impress everyone, and just stick within your script. Work on your financial wellness by following the 4 magical numbers that I mentioned. Make sure at least every month, no matter what happens, even if it's 20 shillings that you put aside, just put it aside. And that one, because of the time factor, you can actually accumulate massive amount of money into the future. And it doesn't matter your background, it doesn't matter your education. People think people in finance are better fund managers in terms of personal finance managers. No, it's not true. There are people who just know, I need to get this, I put this one here, and then put it for the future. Just simple logic.
Right.
And that's how you can be able to build your,
Thank you. Victor Marangu there from Standard Investment Bank, giving us nuggets on savings. And we'd like to ask you a question today. This is our viewpoint question. If my director could just run that for me kindly. We'd like to ask the viewer about their savings discipline. What are you saving for? Well, that is O'Brien Kimani. They are engaging MSMEs who are exhibiting at the EAC Trade Fair in Juba, which has been going on all week. And of course, he has been bringing us reports on how policies are set to be changed or reviewed to ensure that more SMEs from the country are taking advantage of business opportunities available in the EAC region. And of course, we shall be joining up with him later on to give us just more of what happens today at that particular EAC Trade Fair. We now come back to studio where we are talking about matters money. Remember, I had asked you, what are you saving, and if so, for what? I have a number of views here from some of you who are watching. Gilbert T. Rock from Baringo, you're watching. Thank you for watching. You're saying that we save to ensure a better tomorrow, to have a sound financial stability. Irene Kulei, who is also watching, this comment came in from Facebook. She says that I have not managed to save because of meager earnings. And of course, we shall be throwing a question to our expert here in studio, who is Victor Marangu, the head of distribution at Standard Investment Bank. Continue sending your views at KBC Channel 1 on Twitter. My personal Twitter handle is at Betty Kiptum. Tell us, do you save, and for what? Thank you very much, Victor, for staying with us.
Thank you.
Could you just address Irene there, who says that she has not managed to save because of meager earnings? What is a person like that to do?
Yeah, one of the key ways to raise money to invest is first of all looking at your skill level. You could have studied a particular course in college, and then you found a job, and maybe, of course, whatever you earn there is predetermined, and then for you to actually generate real wealth, you ought to offer something that is a bit unique.
Just give me 1 second. Let's just fix your sound there. We'll get back to you on that. Remember that what we are discussing today is about money, and the question is, if you save, and what do you save for? You could be saving for a dream. The holidays are coming up. Have you been saving for your holiday? Some people save to travel, whether it's up country or on a trip with family. Some people are saving for cars, others for investments such as real estate, farms, or they are just saving because people save. And we shall be asking Victor how important it is to have a goal when you are saving. Remember, today is World Savings Day, and the focus is on the importance of saving in just getting people out of poverty and ensuring economic development. Remember that the savings culture in Kenya is a bit low, and we'd like to just make sure that that is improved. I think we have fixed that. Thank you, Victor, for staying with us. You are telling us about what someone who has meager earnings is to do to ensure that they are starting their financial wellness journey.
Yeah, it is important to look at your income streams. Do you have one income stream or you have multiple income streams? And today the world has really evolved that you can take advantage of so many short courses that have come that are aimed at one particular skill. For example, digital marketing, graphics design. Just to give a few examples, you can be an influencer. You are so good at something, you've done research and people are coming to you to get more information about that, and you can actually make money out of that. So if you find yourself in a situation where you're not making enough, then it's important to ask yourself, what am I offering to the world? What you offer to the world is what determines what you get paid back for what you've done. So you have to look at your skill set. Of course, it's a function of your ability to learn and grasp and develop new skills that are in demand. And that way, people will pay you more for what you're offering. So don't get stuck in one situation and say, I'm earning meager earnings. And meager earnings can be relative. It all depends. Someone earning 50,000 will say that's meager earnings. Someone else earning 350 could say meager earnings. It will depend on their lifestyle, the stage of life they are in. And I don't want her to stay stuck in a situation whereby and feel sorry for herself by saying I'm just stuck and in meager earnings. So one of the key ways out of that is to scale up and also seek other opportunities for employment that would appreciate their skill more.
Mm-hmm. Before we talk about the investment options, we are aware that the pay slip of very many Kenyans has been shrinking over the past 2 years or so. Mm. How do you work around a shrinking pay slip, so to say, or when your income, your main source of income is shrinking, what options do you have there? So
first of all, it can be change of career. We've seen so many people opt into entrepreneurship. And of course, that shift is facilitated by learning a new skill, and you're able to take up a new role. And we have seen people venture into agribusiness, for example, poultry rearing, and you continue doing your job, but you still have that other, we call them side hustles, that don't interfere with your work ethic, and there is no conflict of interest as such. So I've seen people back home from where I come, from Meru County, people venturing into agribusiness. They are rearing poultry, they are cattle rearing, and they're able to make money besides what they do, their formal employment. So they have self-employed themselves and they're able to generate income. So let us look just beyond the pay slip and see, are we able to negotiate, now that there's that shrinkage, are we able to negotiate the basic pay? If you negotiate the basic pay, then you can be able to squeeze in for that consideration of the various deductions that are happening. Mm-hmm. But the surest way out of it is looking for alternatives and maybe a change of a career or gaining a new skill and venturing into a new landscape altogether.
Right.
Yeah. Mm.
Now, let's talk about investment options. Yeah. Just take us through the investment options that are available, mm-hmm. especially for people who are just starting. Okay, mm-hmm.
Okay. So there are multiple various investment options out there, mm-hmm. And especially if you're starting out, the primary objective is to have your goal. What are you saving or investing for? That acts like your GPS, is a guiding mechanism for where you want to get. So you ought to have a plan. You have to ask yourself, where am I now? Where do I want to be? And then the other question will be, how do I get there? And now we answer that question of, how do I get there? You first of all start by opening a bank account. You have to have a bank account whereby whatever you receive, you're able now to allocate a portion of that every other month in savings. Then once you have accumulated enough savings, now you can be able to invest. There are various investment options. You can call it, you can have a fixed deposit in a commercial bank. That's a form of an investment because you're given an interest rate of a 3-month, and 6-month, 9-month, or 12-month period. And of course, the interest rates you're given are dependent on the amount you're putting and how long you're investing. Right now, we are generally, the interest rates, the CBR has been lowered, so we anticipate fixed deposit will attract very low interest rates. You can then put your money in a money market fund. A money market fund invests actually in short-term debt instruments, for like treasury bills, and of course fixed deposits. But this one is done now by a fund manager. A fund manager now manages that portfolio, and they're able to give you a return on investment with as little as 1,000, I think 100 worth of 100 Kenyan shillings worth of investment. You're able to enter into a money market fund. And like I said, for someone who is starting, mostly youthful people, you can take advantage of time and not look at how much you're putting and look at how long you're putting it. You can actually leverage how long you're putting it to be able to leverage the compounding effect over time. If you've built your wealth to some extent, you can now start looking at shares. You can start looking at buying government bonds. You can start looking at real estate. You may not be able to venture into real estate directly, but you can buy what we call REITs, real estate investment trusts. You can buy a portion of it and be able to invest in real estate indirectly. Mm-hmm. The other thing, you can be able to form up a group. Maybe you want to venture, for example, invest in a fund like Mansa X Fund, whose minimum requirement is 250. I've seen so many young people come together and they're able to put up a chama, and then they come to us as a chama, they're able to invest. So when the returns are realized, they may opt to roll over the returns, or they may opt to do a partial withdrawal, and then of course the returns are now divided amongst based on how much each and everyone contributed. Mm-hmm. So there's that collective, the Harambee spirit of the Kenyan spirit. Right. You can be able to use that, and we've seen a lot of chama do so well in that. Mm-hmm. And then you continue building that over time. Remember, your GPS is what am I investing or saving for? Mm-hmm. Once you have that figured, and most of the people set goals, they have like 20 goals that they want to achieve. Yeah. That does not work. I encourage people to focus on at least, at most 3 per any given time. And you realize that you want them to achieve the bigger goal, maybe accumulate wealth and maybe have a net worth of like 100 million. You know you are in 10,000, 20,000, 30,000, but you know you're headed to. So cumulatively, every quarter you're able to review where you are, mm-hmm. and it gives you too much satisfaction when you see that you've made a certain milestones every quarter. That's why you need a financial advisor to keep guiding you. Yeah.
Right. Thank you for that, Victor. I'm informed that we need to go to Mombasa, where the Institution of Engineers of Kenya conference has been going on this week, which we are in, and Regina Manyara has been following up on that. Regina Manyara, what do you have for us from the Engineers Convention?
Gets underway. Now back to you, Betty.
Thank you very much, Regina Manyara, there coming to us from the IEK convention in Mombasa. And of course, you shall be filling us in with the proceedings of that particular convention today. We now get back to studio and continue talking about matters savings and investments with Victor Marangu, who is the head of distribution at Standard Investment Bank. Victor, before we joined Regina, you were talking about the investment options that are available for Kenyans. Yeah. And when you have a product called Mansa X, tell us about that and how different it is from the other money market funds. Yeah, okay. Because I think money market funds have been on a rise. Their popularity has been on a rise in the past year or so. Yeah.
I agree with you, Betty. Mm-hmm. Mansa X fund was created as a way to de-risk the Kenyan investors' portfolio from geographical concentration. If you look at most of the portfolios are held here locally, and if you look at the historical returns, they have been barely beating inflation. Inflation takes away part of your wealth by reducing the purchasing power. For example, if you invest, for example, in a typical money market fund and you get an average return of 9%, a year or so, inflation was about 9.2%. That means the entire return was eroded by inflation. So as an investment bank, our team, being very innovative, looked at beyond the Kenyan markets, we have more developed financial centers, more opportunities that lie in the global markets. So Mansa X Fund was created as a multi-asset strategy fund to be able now to diversify not only out of Kenya, but across various asset classes. So Mansa X, you can call it a basket of investments that are spread across the world. So when you invest in Mansa X, actually you invested in S&P 500, for example. S&P 500 is a stock index that tracks the top 500 companies in the US. So you can imagine we are talking about exposure to a total market capitalization of 100 trillion US dollars. That's a big market. So Mansa X invest in equities, what we call shares of stocks, stock indices, invest in FX, what we call foreign exchange or Forex, that people know it that way. We trade currency pairs. We also invest in commodities like gold, natural gas, and other agricultural products that are traded in the various commodities market. And also takes advantage of derivatives. Derivatives are actually contracts that derive their value from the underlying assets. For example, you can take equity derivatives, you can take commodity derivatives, for example, and you're able now, it gives you an opportunity to be able to venture into global without necessarily having to raise a huge capital requirements. And also debt market, for the bond market, there's the US treasuries, the German bonds, and all that kind of stuff. So that exposure across various geographies brings the diversity that is required to be able to generate a return without necessarily taking a higher commensurate risk. Because the questions we get mostly is that, how come you're giving us such a high return? What kind of risk would you have taken for you to be able to generate such a return? And the secret and the answer is in diversification. When you diversify, you're able to pick an asset that earns overall, as an overall positive effect on your entire portfolio. And we don't just pick any asset classes. Our team of financial engineers and research analysts are able to crawl the entire market and look for opportunities that present themselves and take advantage of that. So the portfolio for Mansa X is very, very dynamic. Whatever we were holding last quarter is not what we are holding this quarter. And whatever we anticipate maybe to hold in the other quarter, it all depends on the economic factors and the market dynamics. That is what advises the portfolio allocation for Mansa X.
Right.
Yeah.
When you talk about the diverse asset, investment that you do, of course, it means that you have very varied returns across these assets. So
exactly.
I would like to know how you reach the return that you offer to the Mansa X clients. But before you tell us that, we need to pay our bills here. We are taking a quick commercial break. When we come back, more conversations on matters money, investments, savings. Stay with us. Thank you very much for keeping it KBC Channel 1. You are watching Biz Check. My name is Betty Kiptum, and Lensa Odingo is my colleague on the sign language interpretation. Now, remember, today we are following up on a number of stories. We'd like to just run you through that. Remember that Gachagwa's impeachment case, the impeached Deputy President Rigathi Gachagwa's impeachment case, is there is a ruling that is happening this afternoon at 2:30 p.m. at the Milimani Law Courts. The three-judge bench is set to give a ruling on the conservatory orders. That will be happening at the Milimani Law Courts this afternoon at 2:30 p.m. and we shall be live. KBC will be live from Milimani Law Courts to bring you those proceedings. Another story we are following up on is the EAC trade fair that is ongoing in Juba. Remember that we just had our very own O'Brien Kimani, who is on the ground there following up on the proceedings of the trade fair. Over 500 Kenyan micro, small and medium enterprises are participating at that particular trade fair. Another event that is ongoing is the Institution of Engineers of Kenya, IEK convention, that is going on in Mombasa. And we were speaking a little bit earlier to Regina Manyara, who is on the ground also, just bringing us up to speed on the need to engage local engineers to ensure that they are participating in infrastructure projects for development in the country. And now we remember that today is World Savings Day, and we are talking about matters savings, money, investments. How are you preparing for your future, for your tomorrow? Saving now for tomorrow. And we are asking you, are you saving? And if so, what for are you saving? Do you save, and what for do you save? Remember, you can get in touch with us on Twitter at KBC Channel 1 and also on my Twitter handle at Betty Kiptum. Do tell us if you are saving and what you are saving for. I saw your comment, Frida Katama, watching from Mombasa. You said that you are saving. Of course, you are saving for your children. That is very interesting. And of course, children are one of the things that are some of the people that actually just inform a lot of savings decisions by many Kenyans. And remember, you can get in touch with us at Twitter, KBC Channel 1. Betty Kiptum is my personal Twitter handle. Tell us if you save and what are your goals for saving. We continue with our conversation here in studio, and we are speaking with Victor Marangu, who is the head of distribution at Standard Investment Bank. Victor, you were telling us about Mansa X, the special fund that is ensuring that people are investments are protected from the local happenings, so to say, that affect investment. And I was asking you, how do you determine the return if you are exposing people's money or investment in all these asset classes?
Okay, good question, Betty. The return on Mansa X fund is actually a function of the returns generated by each and every asset. And each and every asset within the portfolio is selected based on its ability to contribute positively to the overall return of the fund. For example, in the tech stocks, NVIDIA year to date has generated a return of 185%. Okay, gold, which is another asset class that we allocate, has returned about 34% return. So that one is a function of research analysts who are able to look at do technical analysis, fundamental analysis, and come up with decisions on when to invest and what to invest in, when to buy and when to sell, when to buy and when to sell. So that one guides the overall strategy of the fund. So you realize that you might have put asset an allocation in a particular asset class that did not do so well, but because you have a huge outlay of various asset classes, some have performed very well now too, to cover the downside of maybe one particular asset class. You can imagine what would have happened if you invested in only one asset class and it goes down. Then that gives you leaves you too exposed. So that dynamic asset allocation is what makes Mansa X very proficient in terms of generating such returns. And those various asset classes, for example, if you invest in debt, you generate interest. If you invest in commodities, for example, you can have you can look at the capital gains. For example, you bought gold at $1,700 USD per ounce, and then it goes all the way to, like, today's about 2,700 USD per ounce. That's a proper capital appreciation. If you invested in stocks, you can get a capital gain, and you can also generate dividends. So all these returns are actually now aggregated, and then they are portioned to the various investors based on where they entered and how much they have invested for that particular period. And this is done on a quarterly basis.
Right. So as an individual, how do you go about building a portfolio that is strong enough, that is resilient enough to avoid the impact of these risks? And also, if you could just tell us any potential risks that are happening to investments in the short term. We have the US election coming up, geopolitical tensions ongoing across the world, in the Middle East. Please tell us about that as well.
So as an individual investor, a typical Kenyan investor will put money in real estate, they'll put money in fixed deposit in commercial banks, they'll put money in a money market fund, they'll put money in a SACCO, for example, they'll put money in a chama, for example. What we recommend is that you look at your liquidity requirements. You can't say now, I want to build a house so that I can be able to pay school fees with it at a particular, if first of all the projected rental yields are not able to reach your objective of paying the school fees. You know very well you want to hold assets that you can easily liquidate, but can still be able to generate value over time. So an individual investor needs to work with a financial advisor to be able to guide them on, first of all, to have a financial plan. When you develop a financial plan, you know what you are allocating to what and to what end. When that one is done, then now you're able to say, I'll put this in a money market fund, I'll invest indirectly in real estate for long-term investments. For short-term investments, I'll put in money market fund, which I can call my money within 2 to 3 days and sort my emergencies. So now where we come in as Mansa X, now we're able now to take that Kenyan investor and take a portion of their portfolio into global markets. We give it a global markets exposure. And the fund has been able to generate returns of up to 17.72% net over the last 5 years. That's a net rolling average over the last 5 years. This year alone, the first 9 months, the fund is about 15.76%. We still have those 3 months to go and then be able to determine the overall return at the end of the year. So we encourage individual investors to engage financial advisors and have a conversation around, for example, a typical Mansa X investor will put even up to 40% of their portfolio and give it a global markets exposure. Remember, you're not carrying all your eggs in one basket when you invest in Mansa X because it is a really, really diversified portfolio. So that diversification, now to touch on what you mentioned about the global markets events and all that kind of stuff. The US election, of course, markets react to US elections big time. And our team is very well positioned to learn, to understand the dynamics. For example, if Trump wins, what happens? If Kamala wins, then what happens? And our team is able to anticipate anything that happens and be able to dynamically adjust the portfolio strategy to be able to suit that particular narrative. We've seen the geopolitical tensions in the Middle East, Iran-Israel conflict. Essentially, people expected the oil prices to be jumpy and all that kind of stuff, but we've not seen much of that because of the sanctions in that side. So the traditional oil producers, the oil market has not been affected as such. Like when we saw during the Russia-Ukraine incursion, that was massive. And our team was able to take advantage of the supply chain constraints that happened. We saw US wheat go up, and our team was able to take a position in US wheat and make money out of that. Natural gas, of course, went up again, and our team was able to take advantage of that. So when you invest in Mansa X, no matter what you hear out there, just know our portfolio management team has a play to take advantage of that particular happening.
You also trade in the forex market, right?
Yes.
What happens when, say, some currencies crash or something like that? How is it possible to lose money? I mean, to lose, money in that investment?
Yeah, it's possible to lose money if a current goes the other way.
So how do you prevent
for a current
that?
to crash? Yes, exactly.
Yeah.
You don't prevent.
Okay.
You don't prevent anything happening in the global markets. It's unpredictable.
Yes.
Now, what you do for a currency to crash, it doesn't happen overnight. There are telltale signs, and that is where our research analysts come in. They're able to see particular movement. Maybe something has happened in this particular country. Maybe their fiscal policy or their monetary policy has been implemented, and it has affected the currency in a certain manner. For example, we saw the Kenya shilling really strengthening against the dollar from 163. Now it's about 129. It has stayed steady there for some time. So most of the people join Forex and they open Forex accounts. They want to start trading. They look at Euro USD, which is a very vibrant and a very aggressive currency pair. It accounts for over 30% of the 7.7 trillion daily turnover. So you can be lucky. But now without a strategy, you end up crashing. The reason why people lose money for it, because they don't have a strategy and they want to time the market. You cannot time the market. We say you do time in the market. So our team is able to do that analysis, and they're able to determine what currency pairs are we taking, which way. Are we Euro, USD, Euro, and they're able to know that if the Euro is strengthening against the dollar, then, okay, they're able to take those positions. And we don't trade just one currency pair. There are various currency pairs. You can have over 100 currency pairs. There are the major currency pairs, the minor currency pairs, and of course the emerging market currencies that you can be able to trade. I remember this one time South African rand did very well against the US dollar, and we took that play and we had a good return on that particular currency pair. So Forex actually forms a very critical part of an investment portfolio, because that is the heart of the capital markets, actually.
Right.
Yeah.
Okay, so as we come to a close of the conversation, Victor, I'd like you to tell us, actually just talk to the viewer, in terms of preparing themselves as an investor, what to look out for in 2 short minutes, please.
Okay, so as an investor, what you need to look out for, you need to look out for yourself first, in the sense that you want to live a dignified life, and to live a dignified life, you work so hard, and you're able to set aside something at the end of the month. I will still stick with the narrative of residual income. Your primary objective, if you are earning meager earnings like we had earlier, your primary objective should be, can I get to a point where I'm able to set something aside? Once you set that aside, then you're able to invest it. And now investments come in all manner of ways. You are supposed to look at what is workable for you at that particular moment. Am I able to access my funds when I need them? Okay. Am I able to get information about my investment when I ask for it? Can I reach someone who is very well informed about that particular investment opportunity? Most of the people, they just read some news somewhere without even scrutinizing the source of information, because someone could be driving a narrative to excite people to take that particular direction. That is why it is very important to work with professional fund managers. When you work with a fund manager, remember there is that aspect of regulation, there is a regulatory oversight, professional fund management, exposure to asset classes which you would otherwise not have accessed with your minimum, because of the minimum capital requirement. For example, when you join a fund like Mansa X Fund, you're able to participate in the global markets. For example, invest in NVIDIA, invest in Apple. People hold phones, but you ask yourself, how much are you making from that phone you're holding? When you use Uber, do you have exposure to Uber in form of an investment? Netflix, people watch Netflix, but when you're sitting and relaxing, watching Netflix and paying that subscription, when you pay that subscription, do you feel this will contribute to your return? And that is what Mansa X gives you the power to do. Thank you.
Thank you very much, Victor Marangu, the head of distribution Standard Investment Bank, there talking to us about investments on this World Savings Day. Where do you put your money, and how do you ensure that your money is safe and working for you? In a little bit, we shall be having a conversation on the cooperatives movement in Kenya, catalyzing savings, with David Mategwa, who is the chairperson at Kenya Police Deposit Taking Sacco. We shall continue with the conversation on matters savings. Remember, today is all about your money. How are you saving your money? How are you investing? This is Biz Check. We take a quick break. When we come back, more on money.